Fiscal policy and monetary policy. If we look at broadly, these are the instruments being used by the central government of countries to manage their economy, to keep the economy stable, financial stability in the economy. And we have observed how, in the past 100 years, we have seen that how this stimulus response is being provided at the times of economic shock, which is in the form of, let's say, the Great Depression of the 1930s, or in the 21st century, we saw the global financial crisis, and recently the COVID shock followed by the Russia-Ukraine war. So, in all of these circumstances, the different economies are suffering from one or the other economic shock as a ripple effect from these crises, and the response largely has been the Keynesian way of fiscal stimulus, putting the money into the market and keeping the momentum going on in terms of the work, infrastructural development, so that the economic cycle keeps on moving. So, with that idea, with that Keynesian philosophy, every such economic shock in the past 100 years have been attempted to be solved in this manner. However, if we look into the possible fallbacks of this, and we have been suffering from one today, is the increasing inflation. Inflation has risen in multiple economies because of these past few years Keynesian fiscal stimulus, and that inflation is in a way making it very difficult for the people to purchase products, goods, and in fact, their currency weakening is happening in a way, and everything is becoming more expensive for people because too much money into the market is chasing too few goods, and there are supply shocks more and more. So, we see this is largely a cost push inflation, and in fact, stagflation scenario is being created in most of the economies. So here the point to understand is that Keynesian fiscal stimulus needs to be practiced in a very judicious way and has to be managed with proper monetary policy framework in terms of monetary tightening and easing, so that the inflation is always under check and people are not robbed of their money, if we can say so. It's important that we safeguard the currency value, and the supply channels are to be strengthened. So proper deployment of money is very critical, and that requires a lot of insight and non-political approach, which will be good for the economy. So that is something which is required from institutions like central government, Fed, RBI, and others, and even the government, when we are going broadly with the fiscal stimulus and monetary decisions. Thank you.